Welcome to Opalesque TV. Today we have Bob Forness, Chairman and Chief Executive Officer of MultiStrat Re. Bob, can you tell me what your firm does on a day-to-day basis?
Sure, Greg, and thanks for having me on. MultiStrat Re is a specialty reinsurance company in Bermuda, and our focus is on asset managers who want to sponsor and develop their own reinsurance companies.
And what was your history and your professional experience that led you to have a specialty in reinsurance?
Well, I've worked in insurance and reinsurance for my entire career, over 25 years, and that's focused on all lines of business, operating in London, in Bermuda, and in the U.S. And I enjoy it because it's a business that's quite unique in its nature and structure. It takes a little getting used to, but once you understand it, it's a great industry to be in.
So day to day, what are you doing for the managers you work with?
Well, we really do two or three things. Myself and my partners, who are Joe Tossig of Tossig Capital, Jim Robinson of Middlebury Securities, and myself in MultiStrat Re, we really look at asset managers as our clients. How can we help them develop a reinsurance company that fits their own risk appetite and really serves the core purpose of helping them to gather assets to manage and to develop permanent capital?
Bob, I would imagine that a lot of the asset managers have no idea what reinsurance is and what sponsoring a reinsurance company can do for their business. Now, tell us what reinsurance is from a conceptual basis and why an asset manager would choose to set up this kind of company.
Sure. Well, a reinsurance company is really a company that takes a share of risk from an insurance company and a share of premium and pays out the same share of expenses and losses over time. So what a reinsurance company really does is it provides financial support and risk protection to insurance companies. Mainly it's writing risk on a portfolio basis, looking at the underlying exposures, but also looking at it as books of business that may need financial support, risk protection, or other forms of capital support.
Now, reinsurance comes across as a very risky proposition to a lot of investors.
No, absolutely. Well, one of the first questions asset managers ask about reinsurance is how risky can it be? Reinsurance comes in a variety of flavors, just like any other industry. If we look at it as a risk-return spectrum, we have property catastrophe or catastrophe-oriented risks, earthquakes, hurricanes, floods. That tends to be very high-risk business and is written by many companies in the industry. And there are many investors who look at that class as a non-correlated investment class that's attractive because it offers the opportunity for significant returns. That's exactly the other end of the spectrum, the opposite end of the spectrum for MultiStrat Re. MultiStrat Re focuses on structured casualty business where we get a significant amount of premium relative to the contractual downside or limit that we offer. In this way, our main focus is finding opportunities to gather in premium assets or premium for managers to manage. And so we take a very low risk approach, whereas there are, on the other end of the risk return spectrum in reinsurance, those classes of business most people normally associate with reinsurance, like catastrophe risk.
So help me understand this on a contract level. Just explain one reinsurance contract to me.
Sure. So if MultiStrat Re is working with a reinsurance buyer, and let's say it's a corporate company that set up its own captive insurance company. So this is a company that is probably writing a workers' comp insurance of its own employees, for example, and is very profitable doing so. And that's why it maintains its own captive, because it wants to retain those profits. But there is the potential for a need for increased capacity in that captive. They may have other constraints like letters of credit that they've issued. And so they look to us as a financial and risk protection partner to help them cover that risk. So if there's 10 million of workers' comp insurance policies within a portfolio, we might write a reinsurance contract that says for 10 million of premium, or those premium reserves passed to us, we might provide some additional risk protection, say 2 million in additional risk protection. So 10 million for 12 million of downside risk. If we write that contract, we now have 10 million of premium that we can provide to an asset manager to manage on behalf of their own reinsurance company. And the only cost or the risk is the downside of 2 million. Workers' compensation business, for example, tends to have an average duration or payout of 4 to 5 years. In that case, you're holding money that should be profitable, but if losses develop, the cost of those losses on a cash flow basis each and every year is probably small enough that the investment yield you're earning is more than compensating for the cost of that insurance. So we talk about that as the cost of premium or cost of float or cost of funds for an asset manager to gather in assets to manage. And the really important measure is the spread between what the investment yield is that the asset manager can make and what the cost of that premium float is for them to acquire those assets to manage.
That's fascinating. So on the downside, you're always knowing exactly the limit of what you can lose.
Right. Well, there are reinsurance contracts you can write on an unlimited basis, but not within MultiStrat Re. MultiStrat Re writes contracts that have a specific quantified contractual cap. So we know each and every risk, what downside we're taking, and when we aggregate it as a portfolio, we're constantly monitoring it and stress testing it so we can understand what the likely best case is, what the potential downside is, and what our worst case is if every single contract were to fail and generate limit losses.
So Bob, give me the nuts and bolts. Reinforce why an asset manager would set up or sponsor a reinsurance company.
Asset managers look to sponsor reinsurance companies first and foremost because it's an attractive way to gather assets to manage. It provides a permanent capital source in that the premium float or the premium written on reinsurance contract serves as assets that persist. If there's periods of market volatility, potentially a manager underperformance, they could suffer significant investor redemptions. However, if they're holding on to premium from reinsurance contracts, those are assets they can continue to manage. They have the opportunity next to earn both a return on the assets through their own management as well as insurance returns. If the company's public, the reinsurance company, it gives the investors the opportunity to have a very liquid way to invest in the fund and to sell their shares. The company also is attractive because if it trades publicly, it may trade it at a premium to book value.
So Bob, why would an asset manager want to work with MultiStrat Re? What value do you provide for them?
Well, MultiStrat Re was purposely designed for asset managers to help them launch their own reinsurance companies. It comes from the experience of Joe Taussig, where he had identified by advising companies who were setting up their own reinsurers that there was a way to do it independently. You can go big. You can use a lot of your resources, a lot of your time. You can put a lot of capital into a reinsurance company, hundreds of millions of dollars. You can spend tens of millions of dollars in terms of cost, in terms of securing a management team to run your business. And you can build a company, and it usually takes 18 to 24 months. And that's if you're successful. The execution is difficult, and the number of companies that actually get launched are relatively few. With that experience, Joe said, I might want to serve smaller asset managers or asset managers who may be large but want to take a more slow, more deliberate process in terms of building their own reinsurance company. And so MultiStrat Re was designed as a low-cost, very efficient, very effective platform for a reinsurer to set up their own, an asset manager to set up their own company quickly, efficiently with low upfront capital and low expense. It takes 18 to 24 months to launch a reinsurance company, even with a host of advisors usually. And it takes a lot of time for an asset manager, and it distracts them from their core business. On the MultiStrat Re platform, because you're using a shared infrastructure, you're outsourcing, you're underwriting to MultiStrat, and because of all the lessons learned that have been built into the design, you're talking about companies that start with 5 to 25 million capital, don't have to hire a team initially, and can immediately be in the market generating premium and raising assets to manage.
What's that going to look like? What's that relationship going to look like?
Picture the MultiStrat Re platform as being a hub and spoke structure. MultiStrat Re is a reinsurance company. It's the hub. It's writing a single book of business on behalf of the reinsurance companies that are on each spoke. Each reinsurance company is a standalone, regulated reinsurance company in Bermuda. It is immune to the investment performance or the insurance risk of any other participant on the platform. So these are standalone companies. And I'm writing a single book of business and allocating a percentage of it to each of my participating reinsurance clients.
So Bob, if I'm an asset manager, I'm trying to set up a reinsurance company, try to sponsor a reinsurance company. What are the steps you're going to take me through? What are we going to go through together?
Well, usually when we sit down with you as an asset manager, the first thing we need to do is introduce ourselves and educate you on reinsurance and how to build your reinsurance company. Usually takes a couple of meetings. We probably spend a couple of hours each time taking you through the model and explaining the process to you. Once you get comfortable and you think that you want to launch a reinsurance company, we actually invite you down to Bermuda and spend 2 days with you, taking you through a full debriefing, sort of an education on reinsurance, an education on the process and the steps that we take. And it's really the how do I incorporate, how do I license, how do I capitalize, how do I enter into the agreements necessary to operate my reinsurance company, how do I put my board together, how do I supervise the reinsurance company over time, how do I direct the activities, what am I permitted to do in Bermuda, and what am I permitted to do in the States, or wherever your asset management company is based. So we go into really extensive detail. We also introduce you to service providers, professional advisors, and other trusted partners we have who will help you go through the process.
So you take that playbook and that template and implement it on a scale that's accessible to small managers.
We do. It essentially takes all the lessons that the big companies have learned and digests it down into bite-sized chunks in a logical progression that will help you go from the decision to launch your reinsurance company to actually being in the market, raising capital, and pushing toward a public listing in a very short period of time.
And so why is Bermuda as a domicile an attractive place for MultiStrat Re?
Sure. Well, Bermuda is a very attractive domicile for starting a reinsurance company. It's the third largest insurance and reinsurance market in the world. It's a specialist in many forms of coverage and an innovative marketplace. There's a significant concentration of the market in Bermuda, so there's a lot of producers and a lot of underwriters, and that creates a dynamic marketplace. There's a flexible regulatory framework of responsive regulation, and that's very helpful when you're building a reinsurance company. It's also a domicile that enjoys other benefits like tax and geographic proximity to the U.S. Well, Bermuda is actually not only just the domicile, but it's actually where I work. So I work in Bermuda. My team is based in Bermuda, and we operate our reinsurance company there.
And so, Bob, and why now? Like, what is driving your business right now and making sponsoring reinsurance companies for asset managers a hot trend?
Let's approach this from both sides of the coin. Traditional reinsurers are suffering from a number of marketplace pressures: persistent low investment yield environment, high cost structure, and a desire to write property catastrophe business, but they're seeing that business pursued by the capital markets as a non-correlated investment class. For asset managers are focused on the benefits of a reinsurance company as a core subsidiary to gather assets. They want to write reinsurance at a very low risk and potentially low margin level if that provides assets for them to manage, because how they achieve their returns is through their own asset strategy. So really what you have is this great combination of factors: pressure that the insurance market, the traditional market, is suffering from, combined with a more efficient and effective form of a reinsurance company that's sponsored by an asset manager.
So what are the key concerns an asset manager has about launching a reinsurance company? What are his greatest fears?
You know, asset managers really want to know, how are you going to not lose money writing reinsurance? They understand their business, but they're just getting to know reinsurance. And they have this concern about, reinsurance is a business where you write really severe risks like catastrophes, hurricanes and windstorms, and you could lose huge amounts of money. Well, we need to educate them on the full spectrum of reinsurance, that there are high-risk classes of reinsurance, but we're writing very low-risk reinsurance that's highly predictive. Then we have to explain to them that we're writing each contract with a contractual cap. So we know the full potential for the downside for the business that we write. And when we show that to them on an individual contract basis, and we model it on a portfolio basis in terms that they understand, that's how they start to get comfortable with building a reinsurance company.
So is there a particular asset strategy that's particularly appropriate for launching a sponsored reinsurance company?
There isn't one ideal asset strategy that needs to be embedded in a reinsurance company. With the clients of MultiStrat Re, we have a range of different asset strategies, from equity to fixed income, resources to real estate. There are different asset strategies out there, and each one can have a reinsurance company designed specifically to fit.